I'm with Marija Kramer, the head of ISS ESG. It is really great to see you at this strange time when everyone is talking about ESG being at a tipping point. Is that true? And what does it mean in practice?
Yeah, so first, Daniel, thanks so much for having me. Yeah, I mean, I would say that for so long, people have really questioned whether investing responsibly was just a fair weather solution and, only really successful in bull markets. And sitting here today, I'd say it's pretty undeniable, actually, that ESG has hit the mainstream, on a number of accounts. First, even before the coronavirus, ESG investing already accounted for, a little over a quarter of the world's managed assets or professionally managed assets. And today, as we sit here in the midst of this pandemic, in one of the toughest, most volatile environments, we're seeing evidence that ESG characteristics are actually driving an organization's overall resilience on a number of fronts. And certainly, sitting here in the U.S., I'd be remiss not to mention that despite the fact that some organizations are pushing aside sustainability priorities sort of to survive in the near term, we are seeing unprecedented support already with early shareholder meeting results tied to E&S proposals, specifically with some U.S. companies. And those are tied to the likes of climate resolutions and different reporting regimes, CSR and EEO. In addition to that, many investors have already come out strong to say that they're not going to ease up on their policies related to those things. So I'd say we're on the other side of the tipping point, and I don't think that the coronavirus is going to reverse that. Right.
So you're talking about resilience. In another word, that's long-termism. So we're in a short-term crisis, but what about the long term? How do we square that?
Yeah, as you say, in the context of COVID, the world is, rightfully focused on addressing the short term, the here and now. But I'd say that, many of these topics that we're facing, whether it's healthcare related or even more, macroeconomic systems that need to get tackled, those are long-term issues. And ESG in general, I'd say, it's fair to recognize are long-term oriented topics. And with the investment adoption rates that we're experiencing in ESG, I really think it's inevitable that the financial community's way of thinking is going to be influenced. And, take a topic like climate change or biodiversity, they're both critical to an investor's long-term performance. And you really can't expect to see quarterly results, on topics like that. So this is about the long term and really pivoting to becoming more sustainable. And then last but not least, I'd also add that, this trend of integrating ESG metrics into the likes of executive remuneration are also going to foster long-term strategies.
What is, in this context, what's the message to clients?
I'd say two things. ISS worked on a study earlier this year that really showed that investments with strong ESG characteristics, generally speaking, have higher profitability, lower firm volatility, and that those firms are also good allocators of capital. We've also seen that those types of organizations and companies are investing in new initiatives, which lead to innovation. So I'd say the bottom line here is that ESG was great to have in a bull market, but it's also turning out to be material in a downturn. And perhaps the second message I'd like to share with clients is that, from a business continuity perspective, as with so many organizations, we took our company virtual effectively overnight. And and I'd like our clients to know that we wake up every morning thinking about both our people and our clients, and sort of no matter the obstacle, we're here to support and deliver for them during this time.
From your perspective, what does the industry look like once we're through this?
Sure. So, even just over the weekend, I was reading a couple of articles in a number of mainstream media outlets that, bring to the forefront this attention to the S in ESG. And, from my perspective, that's a great thing. But in addition, I think that our experience is that investors have perceived the S as sort of the most abstract and difficult to tie investment returns to. And I think this pandemic gives investors really concrete examples of how, companies and also countries for that matter, how their performance is affected by those S factors. We over the past few weeks took a look at the types of company indicators that we evaluate and found roughly 80 that we could tie directly back to a company's sort of pandemic preparedness, if you want to call it that. And I think that post-COVID, investors are only going to continue to incorporate those types of characteristics along with more traditional financial and ESG criteria in their investment process.
Thank you so much for your time. Really great speaking with you.
Yeah, thank you so much, Daniel. Appreciate it.
Thank you.